Hi, I'm Darren. I'm here today to talk about the bank of mum and dad. We've all been there. Children who need help on the rungs of the ladder for property and need a bit of financial assistance. And how do you do it? There are various ways, some of them easier than others, but all of them with their own pitfalls. First of all, the first option would be to simply give them the deposit. And in today's market, an average house needs a very large deposit because the mortgage companies are not actually lending very high loan to values. In most cases, you're going to need a 10%, probably 15% deposit on a £200,000 house. That's between £30,000 and £45,000. A lot of money for most young people to find. So they can borrow it from mum and dad. Not sure about yourself, but I don't have £40,000 to give to my daughter that I actually don't want back. So there is a problem with that. I might need it myself later on. I am getting on of it, and I will be looking to retire, and I've been saving my money up for myself. So last thing I do is give it away to someone else and never see it again. Obviously I can help a bit, but I don't want to give her all the money. The other option you have would be to loan them the money. That causes a few headaches in as much as any deposit gifted by another party, i.e. the parents, the mortgage lenders will look at that slightly differently. They will want evidence where the money came from, so they will look at bank accounts and see the paper trail to see where the money came from, so they will know you gave it to them. And when they do that, they want you to sign a letter. It's a legal document stating quite clearly that it is not a loan, it is a gift. If you say it's a loan, then they will factor in the repayments of that loan to you, which will mean your children will probably get their mortgage turned down simply because they can't afford it, including the monthly payments to yourself. If, on the other hand, you sign a document to say it's a gift, whilst I would hope your children would never do it to you, they do actually put them in a position of not having to pay you back, and you not being able to even do anything about that because you willingly signed a gift document. So be very wary of that. So if you can't give them the money because you can't afford to give it away, and if you can't loan them money because that doesn't really work, what other options do you have? Well, you could, in some cases, there are certain types of mortgage where you can put the money on deposit, but it retains your ownership, and they get the benefit of effectively having the deposit, and the lender will treat that as a deposit, but they won't actually take the money off you. You can't have it back straight away. You have to wait typically 3 to 5 years before you can access it, but you will get it back, assuming that your children have paid their mortgage at that point. So at some point in the future, you will get it back. So that's an option. The other option, if you can't access funds you haven't got, is to withdraw the funds from somewhere that you don't need to worry about. So, for example, your property, a lifetime mortgage, if you're in that bracket over 50, a lifetime mortgage could be the answer to that. Also known as equity release, and don't get fudged down by that particular phrase. It is just a mortgage that you don't have to make repayments on, so it's quite easy for you to raise the capital. You can then give it to them, and if you want to pay the interest, you can. And if they want to pay the interest after you pay you back, they can. Nobody's going to argue, but it's a way of raising capital without actually asking for it. And that's just a couple of ideas there. Obviously, all of those have pros and cons. Any sort of gift, you need some kind of legal advice, really. In fact, in certain circumstances, lenders will insist on legal advice. Any sort of loan agreement, any kind of agreement where your money's locked in, as I said, as a pretend deposit, that would take legal advice. Even your equity release would probably need you to have separate legal advice. So you need to be thinking that there needs to be some kind of checks and balances to make sure everything's above board. First port of call is to speak to a qualified financial advisor who knows what they're doing with regard to the mortgages. Who'll give you the right advice to start with for you and your children, and then independent financial legal advice will also be part of the process. So you'll end up using 2 solicitors for any mortgage raising. So your children will use their normal mortgage conveyancer, and you would use a separate solicitor to confirm that you know what you're doing, and that needs to be signed off separately. they send a certificate to the lender to approve everything, and then everything's okay. So that's it for now. If you need to speak to someone about that, obviously give me a call. My name's Darren. My contact details are on this LinkedIn. And if not, I'll speak to you again soon. Cheers.